the housing market is getting worse and worse, okay? And I feel like this is a play-by-play, like almost daily event going on here. It's changing by the minute. In this video, I'm going to show you some very interesting data that you just cannot just gloss over. Like this chart right here. This house just sold for $849,000 for 480 square feet in Oakland. That just caps off the chaos we're seeing right now in this market. So if you've been following along, I have gone over about everything play by play in the housing market as it's going down. Everything from mortgage brokers getting laid off in the middle of a deal, to new build companies just liquidating everything, real estate agents turning in their shingles. Like, it's crazy out there. It's raining cats and dogs. And so I want to update y'all on what's going on, because it just keeps getting crazier and crazier. And the things I've talked about on this channel are things that have actually happened to me as a real estate agent, somebody out there doing deals and actually working at one of the top brokerages in Pensacola. I mean, I'm talking to some of the best real estate agents on the Gulf Coast every day. And the things I talk about on this channel are those things. Like real things, not some data point on the internet, but my unfiltered opinion. You know, when Jack's got opinions, he says stuff. A lot of times it gets me in trouble, but I want to make sure y'all get the information you need to hear. And it's right here on this channel. Whatever Jack's got to say at that moment, or whatever he's doing at that time. I mean, think about it. Google searches are down 32% on buying houses. Home showings are down 30% year over year. Purchase applications are down 41%. Mortgage applications are down 1% week over week. That's what I'm saying. Like, this is happening almost day by day. Consumer confidence is through the floor. Like, only like 16% of people actually think they can afford a house right now. And I've said it over and over again that if you say something enough, sooner or later it becomes true. And that's kind of where we're at right now. And you know, I'm really passionate about this because through this YouTube channel, I'm able to reach out and contact and help so many people trying to move to the Gulf Coast of Florida, Alabama, and help them in their pursuit of a place to live. And I feel very passionate about it. And I'm very fired up and kind of emotional about it because, one, it's been a crazy rug pull of equity. Equity is what makes the middle class, the equity in your home. And when we have seen what the Fed has done, jacking up interest rates, collapsing the equity in your house, bringing down prices, all of a sudden, and we're talking in a span of 3-4 months with just 0.75, 0.75, 0.75 rate rises, and the thought of them not coming down for a while. You know, I had somebody call me for, they were moving to the Gulf Coast of Florida yesterday, and I thought to myself, what do you tell them? Should they buy? And I was like, well, it depends, you know, if you have a young family. But the crazy part of it is next month it's going to be more expensive to buy because we're probably going to see another rate hike. And then at the beginning of the year, we're going to see another one. And then we're probably going to see another one. And the Fed has said they're going to continue this until 2% inflation. I don't know if the country can actually afford a 2% inflation, because what they're going to have to do to get there is going to crush the economy. I've said this like over and over and over again. They're going to have to hold them there hard and put pain on us for a long time. And I don't want to skew away from the facts. I am giving you data on what I am saying. If we look at Redfin's housing data on the weekly, it looks like this. That looks like pain. Do you see? We see what is going on here. Median listing price is going down. You remember when I said back about 3 weeks ago that a lot of brokerages were telling their agents to list 10% under comps? Because the comps were chasing a running deer going up, up, up to what the market was doing. From the amount of money they had printed, inflation, and when in order to make a dollar, you got to issue debt. That's our fiat currency system. Crazy modern monetary policy. Crazy. Think about this. They're zapping the equity out of these houses. Look at this. This is the median sales price. Look at that. It's going down. Going down. Look at this. Weeks of supply going up. We are seeing it in action almost by the weekly on this data. And remember how I said real estate data lags behind? Well, look, we've got supply going up. We got demand going down, 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 down. It's very obvious. Okay, look at this. Median sales price national. Look at the right side of this chart. They're averaging down. We have the perfect storm here, okay? And I want to like put this, make it very plain. Housing supply going up, demand going down. Fed saying, don't fight the Fed, don't fight the Fed. The Fed is saying we are going to continue to raise rates and keep them up until 2% inflation. I mean, he said it as plain as day what he's going to do. You've got home builders liquidating, offering massive incentives. We've got, and it weird, comment down below on this, I'm not going to go into it, but election day is today, and this is happening almost at the same time as midterms. Comment down below what you think about that. I just follow the money trail. I'll only say what I am seeing. I always say follow the money and you know the line, right? And that, comment down below what you think. Okay, so I want to talk about this. Look at this chart right here. Rent versus mortgage, okay? And I think this is very important because I've said before that I thought that the way you evaluate a investment property or anything investing after COVID needs to be reevaluated. Can I say COVID? The cough cough? The numbers, the formulas, everything needs to be reevaluated because our economy has changed. There's a ton more liquidity out there, which the Fed is trying to clear up through quantitative tightening and raising rates because they created a mess. You can't give out free stuff without putting too much free stuff into the world, and then it becomes less valuable. It's kind of like in Iraq, okay? There was free water everywhere. To the point where there was water bottles everywhere. And nobody was even using them. Like they were just stacked everywhere. There were so many MREs and RFID tags that I don't even know if Iraq could hold anymore. And they were just everywhere, laying everywhere. Dirt all over them, dust all over them to the point they had no value. There was so many of them. And that's what happened to our fiat currency. Anyways, back to the story of rent and mortgage. And I always said that when rent and mortgage come together, the cost versus the cost of renting, when those intersect and they become correlated, people will start doing different things. At the beginning of this entire debacle, rents went through the roof. And it was wild. It just went through the roof. And you were able to own very cheaply. People bought everything. And you had the cost of ownership, you know, your mortgage, the cost of money, the cost to get money, the mortgage, the interest rate was so low that it was like, well, why wouldn't I do that? Because the interest rate I'm getting is below inflation, so I'm going to grab this big asset and I can live in it cheaply. But now the cost of it is going up, 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 up. In the form of the interest rate is going up, 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 up. And I'm very interested to see what will happen if this course continues. Will people just not buy because you've got maintenance and everything correlated with it, property tax, insurance, where it's all baked in on rent? But at the same time, the landlord has to pay for these things on the rental, right? His accountant went up, his insurance gone through the roof, his taxes will go up, the cost of the maintenance man will go up because his insurance and his costs are going up. Will rents ever come down? And I always said this, when the price of the property and the price of the rent don't correlate, like we always said the 1% rule, $100,000 property, $1,000 a month. When they don't correlate, you start to see, just like a stock and its dividend. When the appreciation outruns the dividend usually goes down. When the house appreciates so much and the rent is still here, an investor says, you know what? My money, the return on the money, the cash flow is not there. So therefore, I don't want to buy the property. It starts to affect the price of it. And they've got to correct. And they've got to get closer to a valuation that people are willing to pay for. For me, I'm not going to pay $400,000 for a property that makes $1,000 a month. You will never cash flow. You will lose money. You're playing the appreciation game. And in this market, most investors say we've already seen appreciation. So all we're going to see is properties losing value from here forward until cash flow catches up to it. It's kind of the money line I'm thinking of as an investor. And not to mention, we have not figured out the whole insurance thing here on the Gulf Coast. Florida, last hurricane just totally annihilated any idea of us actually having a meeting of the minds on insurance. That's got to be figured out. And that's how going to keep a lot of these deals from going through here on the Gulf Coast, especially under $200,000, because the houses need work and usually the floor points are bad. So you can't bind insurance to close unless it's astronomically high. I mean, and usually at that price range, the buyers don't have an extra $5,000 or $6,000 to put down for this premium and then be able to afford the work that it needs. So a lot of these buyers will wind up just being phased out or not approved for the loan because they won't be able to afford it. So the bottom end of the market is in a lot of pain, a lot of trouble, and it's not being factored into this data. This data is just saying medium home price, medium sales, median this, median that, average of this. It's not saying, hey, the bottom of the market's in real trouble. This is just going to be something very interesting to follow. I hope you guys like and subscribe. Comment down below. I want to make this a conversation because this is history in the making. I'm just glad you guys are following along with me. This is history in the making, and don't forget to like and subscribe. Comment down below. I like making these videos because this is what I'm doing on a day-to-day basis, and it's easy for me to just tell y'all what I'm seeing as a real estate agent, an investor here on the Gulf Coast of Florida. If you're needing to buy or sell a property, my email is in the description box. Feel free to reach out to me. I hope I was able to provide some type of insight to you. I'm going to continue doing these videos because I enjoy it. People need to know, like, what is actually going on out there. This is not a data point on the internet that I'm just pulling off and talking about it. I literally went out and showed 2 houses this morning. I got 5 listings. I got buyers and sellers coming and going. I literally work around some of the best real estate agents on the Gulf Coast, and we talk about this all day long. That this is what we are seeing. It is cold out there in the market. It is a totally different world, different than anything before, and I don't think it's anything that you could say you saw 20 years ago. This is a new economy. There's a lot of moving parts, and I hope this video helps. See you guys later.